What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way, you're notified when our bonus content is released. Aside from the nightly and weekend videos, we do release bonus content from time to time. So make sure you have that notification button hit. Make sure you follow us on X as well. We do tweet live updates as far as our entries and updates for our scalps and day trades, our mid and long term trades, and any other information we might think is helpful for traders throughout the day. In the weekend video today, we will recap this past week's price action, and we'll also take a look at the QQQ internals for the week. Then we'll take a wide view look at price action from the week, month, quarter, and year view. We'll look at what the market maker's expected move is for this week, and then we'll get into our 4-hour markers and triggers and targets for Monday as well as the week. And then we'll do a quick review of the triggers and targets for the month, quarter, and year. So just getting into the charts, like I said, the first thing we'll look at is the price action for the week as well as the QQQ internals. So as you can see in this upper left-hand corner, we have the price action for SOXL on a 15-minute time frame. The upper right-hand corner, we have tick Q, which is basically a breadth measurement for QQQ. The lower right-hand corner, we have ADQD, which is also another measurement of breadth for QQQ. And then we have vol QD, which is basically a measure of money flowing in versus money flowing out for QQQ. So we can see, the beginning of the week through the end of the week is pretty much reflected in the internals, right? We're in negative territory on Monday with the gap down. I'm sorry, this was Tuesday. Monday we had off, but we had the gap down. So obviously opened low or below zero in the internals with the gap down. And then we did have the push down, which was also reflected in the money flow as well as breadth. And then the push up at the end of the day, which was also reflected there. And you can see how it basically repeats for every day throughout the week. We did get that big push of money coming in on Friday afternoon. So a lot of people buying at the end of the day wasn't quite as reflected in the afternoon price action, but it relatively reflected it. We can also see that the price action for the week respected the levels, the major levels that we have out here. The market maker's expected low. You can see we gapped down on Tuesday and bounced basically off that market maker's expected low. Found that as support, which did pretty much coincide with the month flip. This is where the month opened, so that established the opening print for the month. The opening print for the quarter, or the quarter flip, was not too far above that, along with this weekly uptrend line that we have here in purple. We have last week's high right here, last week's low right here at 25.67, last quarter's high at 25.84, and last month's 50% line here at 26.11. So you can see where the levels were relatively close. We had choppy action, and then where things opened up, we had a little bit more free-flowing action, right? We've got our gap up here, obviously, in the previous week's 50% line. So we can see how they were very well respected, and there's a reason why we have these levels on our charts, right? If you're not familiar with our charting method, it is based in the STRAT. If you're curious about the STRAT, it's very simple to pick up. You'll probably pick it up by the end of this video, but there's basically three things a candle can do, be a 1, a 2, or a 3, and based off of combinations of those candles or numbers, there are 6 main reversal patterns. There are also continuation patterns. We at the Bullish Chips, we like to trade reversal patterns because they give very clear entries and exits, right? You can see entries and targets. So before you even get into the trade, you can calculate what you stand to make, which will then help you, better understand how much you want to risk, because of course we want to keep a good risk to reward profile going. That way, if any trades don't go our way, number one, we're stopping out early, and number two, we can easily recover from those with one winning trade, right? So there are the 6 reversal patterns, and then there are broadening formations, which are very basic as well. So this is just the simplest way to look at price action. This is what our charting and trading method is based in. And then on top of that, we've layered on a couple of extra things, like taking into account the QQQ internals, major levels like the month, the quarter, and year flip, market makers expected move, and just a couple other things that you'll see in here. So we don't take into account a lot of EMAs and MACDs and RSIs and things of that nature. Those are more rear facing or rear looking, trailing indicators, as they're called. What we like to use is the STRAT, which gives you a projection of a high percentage chance of where the price action will take you. So instead of looking back, we like to look forward using what was in the past. And with that, we have our our method of trading, which is based in the STRAT. So again, if you want more information on the STRAT, there's a link to that PDF in the description of this video. It's free. We don't sell anything here at Bullish Chips. There's also a link to Rob Smith's YouTube page. He is the inventor of the STRAT. It's nothing new. It's been around for years. As a matter of fact, Rob is actually no longer with us, but there's plenty of information still on his YouTube page. There's a huge STRAT community out there as well. So from things like scripts for Thinkorswim or TradingView to number your candles automatically for you, and or just better understanding this strat. There's a huge community out there. So again, it's not a new strategy. It's proven. It's tested. It's repeatable. It's not just for SOXL. It's for any ticker out there. But yeah, that's how what our trading is based in. But a little bit more explanation of these levels can also be found in the link to our description of our bonus content for our charting basics and the precision charting level, precision trading levels. So I'm done now talking about that. Let's go ahead and take a look at the wide view of price action for SOXL. Let's go ahead and bring up our big chart. Here we go. So just from a week perspective, we can see, we're still just dancing along last quarter's high, right? Ranging in between that 28 to 24 level. We got the bounce off of the 24 level at the low of this week. We're back towards the 50% of the move of the range, right? And so we kind of stalled out there, but we did reclaim some positive territory for the bulls if you're bullish. Again, whether you want to look at this as a bull flag, either originating here with the flagpole or from here with the flagpole, it is just sideways action. It does look like it's just more of a flag bullish consolidation than anything else. We're not getting any real big pushes to the downside. As a matter of fact, this short dashed purple line is a weekly uptrend line. Again, we don't put a lot of emphasis on uptrend lines, but we do like to just put them on the chart to help people better visualize what's going on. We put a lot of more weight into these broadening formations, and you can see these two weekly broadening formations here. But if you take this weekly broadening formation and this uptrend line, and you can see it's a channel slowly going up, but it's a channel going up, right? We don't have a channel going down. We did start or try to start a downtrend last week by producing a lower high, but this week we did not produce a lower low, and in fact we did what we call in the strat community is made a failed two down. So we went two down, so we went below last week's price action, but we pushed back up to the stamp from the point of we closed above where we opened, so the candle is green. So yes, it did push down, but the overall price action for the candle was up. So we have the failed two down. We've reclaimed last quarter's high, last month's 50% line. We're handily above, well, I won't say handily, but we're still pretty well above the quarter and month flip, trying to get back up to this year flip, which has been a resistance for us over the last 10, 11 weeks. Trying to break above that. If you take a look at the upper left hand part of the chart here, we've got our time frame continuity indicators, and we can see that the week was green, the month is green, the quarter is green, but the year is still red. So we want to get that year flipped green. If we do, that's momentum for the bulls. We can start trying to test this weekly broadening formation, possibly break through it and start testing higher points of this broadening formation, maybe trying to close this gap up here, really building that momentum for a fourth quarter push. The reason why I say fourth quarter is because we are in September, October, which are the worst performing months for tech throughout the year. So it doesn't mean we're going to have a big pullback, but it generally means we're not going to have a big push up. So this sideways action is kind of par for the course for this time of the year. The end of the summer tailed off a little bit more than you would like to see, but it just still ended up resulting in the beginning of sideways price action. So not nothing really bearish on the charts here. We do have the gap below. That's not too far below. And if we did go fill that, that would put us back below this monthly downtrend line that we have been fighting for a little while, as well as the year flip. But that still would be considered a somewhat healthy pullback. If we look back, remember before the sideways action, we had seven green weeks in a row, which was we had looked at that time had only happened one other time in SOXL's past. So we've got this flagpole here. If you want to just start it because of this sideways action or in slightly red action before the origination point here, or you can look at this origination point here of the flagpole. Either way, if we were to break to the upside, that should show that at the very least we should get close to filling this gap, if not filling it. So from a weekly perspective, still just sideways action. I've been saying kind of the same thing over and over for the last 7 to 10 weeks. I'd say 7 weeks because it took about 3 weeks for us to establish this range, but we're just continuing to buy calls at the bottom around this 24 area. We're continuing to buy puts at the top and sell calls at the top. Just continuing to do that, consistent income coming in off of those strategies, giving yourself time on the contracts. Intraday, trading just whichever direction the price action takes us. When as we get into our triggers and targets, you can see how that's easily done. But from swing trade perspective, we're just buying calls at the bottom and buying puts at the top, selling calls at the top, and just waiting for us to finally make some type of decisive action, either below the range or above the range. You can see at previous weeks we did try and poke below. We did what's called a look below and fail, as well as a look above and fail, but just continuing to stay in this range. So I think that's enough from the week perspective. From the month perspective, we're still in a pretty bullish situation. We've got we're in an inside month right now. So in the STRAT community, that's called a 1. So we're an inside month. Last month was a 3 or a bullish engulfing candle. So, still from the month perspective, now this is starting to look like a flag. The further we continue to flag out or go sideways on the week, just now establishes a flag on the month perspective. So, we're definitely positive on the month. We're above the quarter flip as well. We're trying to get back to closing this gap and pressing the year flip. So hopefully getting the year flip and getting a 2 up on that on the month. So there's not a whole lot else to say from that perspective. We are back up in this greater trading range, we're still in last year's trading range is what we'll say. Is we haven't fallen back out, but we're still at the bottom of it. So not exactly bullish, not exactly bearish, just looks like we're flagging out. From a quarter perspective, we're still in a pretty good position. Let's go ahead and take those off of there. Still in a pretty good perspective. We're back in force on the 2 down, 2 up. When I say back in force means that price action this month is back above last month's high, right? Last week when we pulled back, that brought price action back inside of last month's price. We're on quarter. Last week when we pulled back, that brought price action back within last quarter's price action, taking the 2 down, 2 up reversal, no longer in force, taking it out of force. But now that price action is back above the high of last quarter, it's back in force. So again, we're targeting the high of the 2 to the left of this 2 down. So that high is that 36.15 that we're looking for. Again, if we can flip back the year green, we're in full time frame continuity, and that gives us a little bit more momentum to try and fill out this STRAT reversal. From the year perspective, from the year perspective, we can see once again we triggered the 1, 2 up, 2 down on the year, almost reaching magnitude. We got down to the 723. The magnitude of a 1, 2 up, 2 down is the low of the candle to the left of the 1. So this is a 1, an inside bar. It never went below this candle. It never went above this candle. So we have the 1, 2 up, 2 down, targeting the low of this candle, which is 621. So we got down there, we got close, but we never fulfilled it. So seeing how the year is still red, we've got to still keep that in mind. Do I think we're going to actually fulfill that strat? No. Even if we have 2 bad months, September, October, I don't think we're going to drop that far in just 2 months. I mean, it's a possibility. We were down there before, just in July, and it didn't take that long for us to drop down there. But I think that's kind of run its course. Maybe we go fill this gap. There's a big stop level around here at last year's low, the month and quarter flip. So maybe, market makers are trying to, stop people out and go back up. However you look at the market, that may be conspiracy theory for some people or whatever. I think we may have another little push down, maybe fill that gap before we continue back to the upside, hopefully flipping this year back green. But again, we're not going to get into predictions. The end of the year is still 4 months away. So that's our wide angle view. I don't think that we need to rehash that stuff anymore. We've kind of talked about it over and over. If you're new to the channel, I encourage you to go back, maybe look at some of our other weekend videos, maybe even the nightly videos where we talk about a lot of these levels. But as you can see, we've just been stuck in this range. Let's go ahead and take a look at the market maker's expected move for this week. To do that, we pull out our options chain. This is Thinkorswim, and what we want to look at is this week's options chain. And so September 12th is a Friday, and we can see that we got a plus or minus $2 and we'll call it 19-cent move. This is the market maker's expected move. There's 79% chance that price action will stay within plus or minus $2.19. So if we go to our notes for Monday and this week, we can see Monday, September 8th. These are our notes. On Monday, there will be 78 trading days left in the year. We closed at 26.45 on Friday. But we can see here we've got our market maker's expected move for the week of $2.19. That gives us a high of 28.64 and a low of 24.36. So again, that's just adding $2.19 to 26.45, and then that gives us a 28.64. And then if we subtract $2.19 from 26.45, that gives us 24.36. So if we go to our charts and let's bring up for tomorrow, we can see that we've got this. Let's take this fib off of here. We've got this marked out where the market maker's expected move high is up here at 28.64. That puts us up around this downtrend line for the weekly time frame. So that gives a little bit more credence to this downtrend line, right? Again, the uptrend and downtrend lines we don't put a whole lot of weight into, but when they line up with horizontal lines or interact with horizontal lines at key points, then that's when you kind of give a little bit more weight to them. So this does seem to be a real downtrend line, even though we haven't made a lower low. From a high perspective, we're making lower highs on the week, so we will have to look at that as a possible point where price action stops or even reverses. If we get up there early in the week, maybe it reverses there and pushes back down into back deeper into the market maker's expected move. But we can see we've got last year's 50%, which lines up with last quarter's high. Just further evidence that for the last month, at the very least, we've just been tiptoeing above and below last quarter's high. So another reason why we keep last year and last quarter and last month's high 50% and low on our charts is because they are serious points of inflection for price action. Just below that, we've got our last week's 50%. So we've got some pretty good support to the downside. Even if we were to break those, we've got more support here. Market maker's expected move low. It lines up exactly with the quarter flip, which is just got the month flip right below it and last week's low right below it, last year's low right below it. So a lot of support. You can see why we've had this range low at the 23 to 24 area. A lot of support there. So from a bull's perspective, that would be encouraging. And you can see the market maker's expected move low is basically above all of those points. So it is expected that price action should stay back above there, up closer to the range high. So again, we just take a look at our options chain. I'm sorry, I don't know why I blanked out there. We just take a look at our options chain, and we get the market maker's expected move. We chart it out, and that way we have a good idea of where price action should be going for the week. All right. So we've got that market maker's expected move. Let's go ahead and get into our triggers and targets. We'll start out with the week. Actually, we'll start top down from the quarter, because That way we can get into our scalp stuff. But we can see from the quarter, it triggered at 25.84, and we're looking for a high of 36.15. That is in our notes here, right? We triggered the 2 down, 2 up. It's in bold and underlined, meaning that the underline means it was triggered. The bold means it's in force. So above 25.84, we are targeting 36.15. That's the magnitude. And then we've got some extended targets out there. To the downside, if it were to go, this would trigger a red 3. Red 3, it would trigger at 7.23. So it's got a long ways to go down from a quarter perspective. I don't think we're going to get a bearish engulfing candle on the quarter. From the month perspective, let's go ahead and bring in the month, right? Oops, give us the year. Come on, give me the month. All right, if we're looking at it from the month perspective, again, we're inside month. We're just looking for some direction at this point, right? We had the bullish engulfing candle on last month, and we're just trying to get back to the top of this range, fill this gap, get back above 28.13 to flip the year green, flipping everything into full time frame continuity to the upside, trying to get back up, triggering, targeting, the higher high here first, and then this gap fill here, and then this next higher high. But from a monthly perspective, we can see that the 2 down would trigger at 22.57 and have a target of 21.09 with some extended targets, and the 2 up would trigger at 29.66 with our first target being that 30.15. That should be ingrained in your brain if you are familiar with this channel. If you're not familiar with this channel, if we look at 30.55, that is the 2020 low to all-time high, 61.8 Fibonacci retracement level, right? And you can see how it was support here by the fact that these only wicked through, right? Support, finally fell through. Once it did, it was lightweight resistance here before the continued push down, resistance here, a little bit of resistance here, but then support, finally fell through. Again, was resistance. Okay, so it's going to be resistance again for us. We want to try and flip that back green, get a higher low above that, which would give us more momentum to the upside. Right, so that's from the month perspective. That's why our first target would be that 30.55, and then of course we've got the extended targets here as well. Looking at it from a week perspective, this coming week, to get a little bit further in here, this is what we want. Actually, that's not what we want. This is the chart we want. So from the week perspective, again, we're just moving sideways, but we did have the failed 2 down, which is encouraging for bulls. Let's just look at the downside first. It would be a 2 up combo 2 down, right? So this was the 2 down. You got the 2 up and then 2 down. The magnitude was the low of this candle, but you can see it didn't reach it. So it may take a combination of this 2 down plus another 2 down. So we call that a combo 2 down. So a 2 up combo 2 down to reach this magnitude, which is not too far, right? So it would trigger at 23.80 and it would finish at 23.66, right? So we've got that on our notes. 23.80 is the trigger for the 2 up combo 2 down. The magnitude is only 23.66 though, however. So not a lot of magnitude there, but we do have the extended targets to the downside that we have listed, right? The lower lows here, and then the gap close, as well as the lower low on the week perspective. So we've got those triggers and targets to the downside. I don't think we're going to see the downside action. We could, but I don't think we're going to see it. Again, the market makers' expected move is right here at the quarter flip. So even the market makers don't expect the move to be to the downside. Let's look at the triggers to the upside. We would have a failed 2 down, 2 up. So the failed 2 down, 2 up would target the high of the 2 up to the left of the 2 down. So it triggers at 26.97. And it would finish at this high at 29.11. So we've got that in our notes here. We've got 26.97 would trigger the failed 2 down, 2 up with a magnitude of 29.11. So that's a lot more to work with. Bigger target. Give yourself some time on your contract and let it just run up to that top of that range there. If we do break the top of the range, we've got the extended target of the higher high on the week right here. Oops, right here. This higher high, 29.66. Then that 30.55 once again, which is that 61.8 fib retracement of the 2020 low to 2021 high, and then another extended target here at 32.64. So we've got again, from the high time frame perspective, These ones are still intact, right? We're not entering a new month, quarter, or year, so they're still there from the month, quarter, and year that we're in. Only thing that's really changed here is the week. Looking more to the upside than to the downside, but we need to have our triggers and targets for both directions so that we're ready no matter which way price takes us. Again, we're not price predictors. We don't react to action either, to price action either, right? Reacting is just doing something without thinking. We respond. Response infers that you put thought into your action, and the thought is this homework that we're doing here, right? So we know if it triggers to the upside, we know what our targets are. If it triggers to the downside, we know what our targets are. We don't care which way it goes. We're just looking to capitalize on that price action. So let's go ahead and bring it down. Let's look at things from an intraday perspective, and then we'll work our way up to the full day triggers and targets. Let's go to a 5 even, and let's go to the scalp chart. So we can see this gets into our 4-hour markers and triggers and targets, right? We can see we've got the previous high a day, the 4-hour trigger to the upside, overnight high. Well, at least what overnight high is at this point. This could change by the time price opens on Monday. We've got our overnight low, and where's our previous low a day? There we go. Previous low a day is right there. So those are the 4-hour markers. Previous low a day, 4-hour trigger to the downside, overnight low, overnight high, previous high day, and then of course opening print. And what we mean by opening print is where price action opens. So let's just say price action opens here on Monday, right? So price level 1 is opening print. What we're looking for if we want to get into calls is we're looking for higher lows above the opening print. So it doesn't matter the time frame, it just matters what you are trading, right? So I'm not telling you what to trade here, but if you were to be a scalper, say, and we're looking at the 5-minute chart, you would look for some type of higher low here, right? So say we get a push up and we get a pullback and you get a higher low, you would want to enter on the trigger of the higher low. So whenever we get, say like a 2 down and then you get a 2 up to lock in this as being a higher low, you want to buy on that trigger, and your first target is going to be the overnight high and this 4-hour trigger to the upside. It's not going to give you a lot of money, so you could scalp it just to that point. If you've got a lot of contracts, take your profit there. But what you would want to look for is continued motion to the upside, higher lows above overnight high, and your next target is going to be the previous high of day, right? This is part of the proven and repeatable strategy that we use. We use this every single day. And the only time we ever lose is when we, I'm trying to think of when we lose. I mean, I guess, there's news action that may reverse things real quickly. We keep stops on so we minimize any losses that we take. But I guess maybe if we enter early, if we don't look for continuity with higher time frames like the 15-minute, 1 hour, 4 hour, if we're going against trend, those are times that you may lose. But from a pure scalping perspective, if you're getting higher lows above opening print, you want to be looking for calls. In reverse, if we get price action, we open here and we get an initial push down, we get a push back up, but then a lower high is set here. You want to buy the lower high. You want to buy puts. Your first target is going to be the overnight low, your 4-hour trigger to the downside, and then previous low of day, right? So you can scale out at those points. You could even scale in at these points, right? Like you can get your first batch of puts up here underneath the with the lower high underneath opening print. You get your push down, and then say you get a lower high underneath the overnight low, you can add into those puts at that point, buy more puts, looking for the previous low a day. Now, one thing you want to keep in mind is this 2584 is last quarter's high. It's been a resistance and support line intraday for about 11 weeks now. So you can see how there was support here, it was resistance here. So you want to keep that in mind when targeting that previous low a day. Maybe you want to scale out a little bit here if we get some corrective activity or some sideways action, right? But from an intraday perspective, this is the proven, and repeatable strategy that you can use as long as you've got your previous high of day, overnight high, overnight low, and previous low a day at the minimum. You can also put in there your 4-hour trigger to the downside, 4-hour trigger to the upside. And as long as you've got those in there, you've got very high, you've got target points that get hit at a very high rate, right? I want to just make sure I say that correctly. You have target points that get hit at a very high rate from an intraday perspective. Now, whether you want to work this into your entries into swings, that's another level to this, right? Like, so if you're waiting for a pullback on the 4-hour time frame to confirm a higher low, to confirm a 4-hour uptrend or a daily uptrend, once you get that higher low on the 4-hour perspective, you may zoom into this 5-minute, 15-minute, 1-hour perspective and look for your higher low above opening print, or above overnight high or whatever, above previous high a day, to confirm, okay, this is where I want to enter my swing trade for a 2 or 3 night swing, or something like that, right? So that's how you can add that in. I won't go into too much detail. I don't want to make this video too long. Maybe I'll make another precision trading video that goes even deeper into that, but that's just another way that you can work these intraday levels into some swings. So just high time frame perspective can still be worked into these 4-hour triggers and targets. All right, so let's get out of the scalp chart and let's just take a look at our triggers and targets for the 4-hour and the day. So we can see here we have on the 4-hour chart, we had on Friday a 2 up, a failed 2 up, right? Because it's red. It opened up here but closed down here, so showing we had overnight bullish action, but the intraday was bearish, at least in the first 4 hours, and then we had an inside candle, a green inside candle. So that leaves a reversal in both directions on the board when you have a 1, right? So we can have a 2 1 2 up, triggering at the high of this candle, targeting the high of this candle. This is just a 4-hour time frame perspective. And we can have a 2 1 2 down, which would trigger at the low of this 1, and we would be targeting the low of this 2, right? So we have those here in our notes. We have the trigger to the downside at 25.90 with the magnitude of 25.60. So the low of this candle is 25.90, the low of this candle is 25.60, right? We've got extended targets of 25.38 and 25.19, right? 25.38 is last week's 50%, and 25.19, yeah, 25.19. We bring out our fibs here. If we go from the move there, was it this one? Maybe it was 25.12, but just this general area is our extended targets for the 4-hour. Oh, 25.19 is the low of this candle right here. That's what it was, which coincides with this fib right here. So 25.38, 25.19 are extended targets to the downside. Now to the upside, again, it triggers at the high of this candle, 26.59, and has a target or a magnitude of 26.97, right? So triggers at 26.59, magnitude of 26.97, extended target of 27.35, which is the opening of this gap. And if you're familiar with this channel as well, we know that intraday gaps can, while gaps do like to be filled, gaps can also be rejection and bounce points, right? So there's many times, like if you look back here, this gap was here before price action got back to it, and you can see we bounced off of that gap. So the same type of thing could happen here. We could get up to this level and we could reject off of that gap. But that's why we have the extended target of just the low of this gap. We'll get into the gap fill and the year flip and things like that for the day triggers and targets. But from the 4-hour perspective, make this just a little bit bigger for everybody to see. We've got the trigger to the downside at the low of this candle, magnitude at the low of this candle, extended target at the low of this candle. To the upside, triggering at the high of this candle, targeting the high of this candle, extended target as the opening of this gap. Okay, so that's our 4-hour perspective. If we look at the day, on the day, if we look at the downside first, whoa, come on, Thinkorswim. If we look at the downside first, we have a 3, 2 up, 2 down on the board. Now, a lot of people who are familiar with this channel know that's one of my favorite patterns. 3, 2 up, 2 down, and 1, 2 up, 2 down are 2 of my favorite reversal patterns to the downside. They give very clear entries, but they usually have wider magnitudes than a 2 up, 2 down, or a 2 down, 2 up, right? So the trigger for the 3, 2 up, 2 down is the low of the 2 up that we had on Friday. Again, this was a failed 2 up, although it was a hammer. It was a red hammer, so price still closed below where we opened. So the low of this candle is 25.60. So if price action gets below here, we want to enter puts and we want to target the low of this candle, right? 3, 2 up, 2 down. The low of this candle is 23.98. So that gives you a good magnitude there, right? So if we look on our notes, we've got 25.60 as the target. As the trigger. 25.12 is the target. What I did here is, because that's such a big move on an intraday perspective, I went ahead and got some Fibonacci's here for targets on the way down, because we know that this is going to be it's going to be kind of a fight to get back down there. And so to do that, activate. We just put some fibs here to give us some targets within this bigger bullish engulfing candle. So we've got those those targets on the board. Let me go ahead and remove this here. But the ultimate magnitude that we want to reach is the low of this 3, which is that 23.98. So 25.60 is the trigger. Some little targets in between, but the ultimate magnitude is that 23.98. If we look at to the upside, we have a 2 up continuation. So this is where we look at continuation patterns versus reversals, right? A reversal has a very clear entry and a very clear exit. A continuation has a very clear entry, but the exit, we have to use our judgment of price action and our major levels, along with any broadening formations we may have for our targets. So to the upside, the 2 up triggers at this 29.67. Our first target is going to be the gap open, right? Because again, we can reject off of gaps just as easily as we can fill them. Our second target is the gap fill / the year flip, right? So first going to be that gap fill, but we have very, very little to go between the gap fill and the year flip. But again, the year flip has been resistance for the past 10 weeks, right? So we could easily see price reverse there. That's why we're keeping that as a target. Our last extended target would be this market maker's expected move high of 28.64. Again, it coincides with this lower high downtrend line that we have. Again, we don't have the lower low, so it's not as heavy of a downtrend line. But it does coincide with this market maker's expected move high. Again, there's only a expected 79% chance that price action stays within there, which means there's a 21% chance we could go beyond the market maker's expected move high, which we would then be looking at like the 29.66 level. But again, this is why we have the levels on here that we have. We're not looking at EMAs. We're not looking at MACDs. We're not looking at, we take into account trend lines here and there. But we have major horizontal levels that we use for our triggers and targets. They're very clear, and this is why this strategy is proven and repeatable. Okay, so there you have it. There are triggers and targets for not only the 4 hour, the day, the week, the month, the quarter, and the year, but we have our market maker's expected move. We also have our gaps above that we want to try and fill, along with gaps below that we want to keep in mind, right? We know what the flip is for the year. For the month to flip red, it would have to go below 24.08. For the quarter to flip red, it would have to go below 24.38. But this is what we really want. We want the year to flip green, so we want to get above that 28.13 level. We'll have the week flip posted up here on Tuesday once we know what the opening print is for the week. So that's why we don't have that in here now. But we have everything here in just this little section of notes that we need to trade anything. Any price action on SOXL, whether it's a consolidation day or a big breakout day, either way, we know where we want to go with whatever direction price action takes us. So again, I tried to keep this video as short as I could with packing in as much information as I could. I hope I've gone over everything clearly. Again, we're just ranging, continuing to range. Past 10, 11 weeks we've been ranging. We just want to play the edges of those ranges, buying calls at the bottom, buying puts at the top, selling calls at the top. Yeah, and that's pretty much it. Just give yourself time on contracts. Have faith in your levels. If these levels don't hold, that's not necessarily a bad thing, right? Like if we reverse here and go below the bottom of the range and start going down, that's fine, because now price is actually chosen for a more medium time frame. Right now we can look at buying those puts to the downside, selling more calls to the downside on a longer time frame perspective, more than a month out, maybe 2 months out, before we get our hopefully our fourth quarter bounce, our Santa Claus rally, or whatever you want to call it for the fourth quarter. But for now we're just playing the edges, right? So that's how we can play it. I hope everybody had a great week using the triggers and targets that we provided. If you didn't, let me know. If anything is confusing you, let me know. If I go through anything too quickly, let me know. If I'm making these videos too long, let me know. I just want to make sure, this isn't a beginner's course, right? I'm not trying to teach you everything. This is more of a, intermediate to advanced course. Knowing how to already trade, knowing concepts, and knowing a little bit of price action, how you should be positioning yourself with risk, things of that nature. So I don't want this to be a beginner's video, but I don't want to leave anybody behind as well. So that's why I also include the bonus content. So I pay attention to the comments. Anything you guys need, I will make in bonus content. Again, I'm not selling anything. We're not selling anything here. Sorry, I'm the one doing the video, but we're not selling anything here at Bullish Chips. We just want to provide the best information we can about a proven and repeatable strategy, and to spread the word about SOXL. Just like the STRAT is not new, SOXL is not new either. It's been out there, but and it's traded. It's pretty liquid. But the more liquidity we can bring to that market, the better the options flow. And again, we just continue to repeat for the entry of price, right? For the premiums that you pay, it's very hard to find such a high delta to low theta ratio, right? On a such high beta underlying stock. So what that means is, wherever you're doing your research on SOXL, it's between a 4 and 5 beta stock, meaning you've got a lot of price action on a day-to-day basis, which means that your premiums have a good chance of moving a lot within one day, right? Either intraday or over the full day, even over a full week. So to have a high beta stock or underlying ETF means that you can trade it every day and have a reasonable expectation to make a decent amount of money every day. And because of the way that delta to theta is skewed with the low premium, low price entry, it's just a great recipe for consistent profits daily, weekly, whatever time frame you're trading. It's just a great formula for consistent profits. So we just hope that everybody enjoys these videos. Give it a thumbs up if you did like the video. Help spread the word, and enjoy the rest of your weekend. Have a good night. Have a good rest of your day, whatever time you're watching this. But just wake up refreshed on Monday, ready to trade. No revenge trading if you didn't have a good week. No euphoric trading if you had a great week. Right? We're just back, level set, ready to trade in whichever direction price action wants to take us. So have a good rest of your day, night, whatever it is, and I look forward to trading with you on Monday.